Well, the housing market is following commercial and it's starting to burst. Now, Nick Gerli has been on this for a really long time. He's starting to see in Florida that prices are dropping 10, 15%. Losses, that's going to accelerate into a greater loss. You just have to know that because, a lot of these people were buying these properties here in Phoenix, the house on the market for $350. They're bidding $350, and then you get 20 bids, and then you had people bidding $375, and then $400, $425. Just had to have a house. So now they've got a house that's $75,000 over market, and now the market's starting to go together. Now, Nick is following things from Reventure. You might want to take a look at that. Nick is following things that bought from DR Horton, so they paid market for it, and they're still dropping. We're going to talk about some of this stuff as we go along here, but this is what's happening. It is following commercial. Now, places around the country, as these interest rates changed, commercial became non-viable, and we're going to have problems with them. So the moment they have to refinance, and couple this with vacancy that's historic, we're getting data that says that with all the new office buildings coming on in mid Manhattan, that vacancy is over 50% there. We can't run a business that way. You're not. That's a non-viable, and all those people who develop that's probably going to lose money. Same with the new construction going on. We're seeing that. Ken McElroy just purchased the property in Las Vegas, $50 million below cost. So this is what's happening with these things. This is coming to housing. It is coming. So if you haven't made any money, if you feel like you are behind the eight ball, you wanted to buy and you got priced out of the marketplace, if you think your retirement funds weren't enough, if you think that you'd like to semi-retire or retire, you're going to have a huge opportunity coming to you. It's going to be scary as all get out. Oh my God, you guys are going to be just scared to death because the economy is going to look terrible. It's just going to be terrible. So whoever becomes president is going to have this huge problem. It's just coming. Nothing can be done about it because the die is cast. However, it's going to be that way. And you guys, if you just hang in there, that's my job, is to tell you what's happening and to buy right along with you, because I've made a fortune in this business. And let me just tell you what we did in 2009. Let me go to my next slide, and you'll get an idea of what we're talking about here. So in 2009, we were buying houses that were 2 to 4 years old, and they were virtually new. We would buy these properties from the banks. We could buy 10 a day. We would pay no more than $50 a square foot. Our cookie cutter, of course, is right at 1,500 square feet. So a property would cost us $75,000 below what it costs to build it. We were buying below cost, and we just bought the living daylights out of these things, and we just made a fortune. That's coming again. I don't know if it's going to be $50 a foot, but I think we're going to get them below cost. So let me go to my very next slide. Now, 15 years later, now just pass this up 15 years, 2009 to 2024, our houses have tripled, some quadrupled. Some we paid $75,000 for are now worth $450,000, and they cash flowed the day we bought them. So 15 years of cash flow, 15 years of enormous appreciation. And you think we've made some money? You absolutely correct. We made a lot of money. Now, this is where we are. I've been keep talking about this. We just keep talking about this. We're here at the top. This is a process that takes about 2 years to finish, and we are completing, and we're going to come down this side. Debt and capital destruction on a massive scale. Now, it's real easy in the real estate business. We're in a bull market 14 years. We're in a bear market for 4. So you get out before you get to the bear market, and then you sell, and then right down here we start buying again. So that's coming. Risk is very high. Best thing for you to do is stay out of the market. Stay out of the market. Best thing you can do. Just stay out. If you've got something to sell, get up and sold, because I think we have a correction coming in a huge, huge way. Let me go to my next slide. Let's just take a look at that. And we'll talk about that. Let me get over here and manipulate these slides. So yes, I think when we get to the bottom of that, we are going to have a bubble burst. And what does that mean for you? It means that you can make an absolute fortune. So I want to continue this. This is what I'm talking about from Nick Gerli from Reventure. I got that this morning. Here you are, you're looking at this property. They bought this in 2022 for $305,000. It is not sold yet, and it's on the market for $279,000. They bought this brand new from DR Horton. So they didn't overprice it. They didn't overbid it. It's just what this thing is going for. And so they're already looking at a loss of $25,000. What is that? It's not quite 10%. But keep in mind now they got to pay fees, they got to pay costs. They're holding this property, and it hasn't been sold. So they're probably going to pay points. They're going to pay, there's going to be some negotiations. So these guys are losing money. Let me go to my next slide so you can see that as well. This one is also, they paid $360,000 for this property, on the market for $325,000. They've got a 10% loss booked already. This is what we're looking at. I think these losses are probably going to go to, I think they're probably going to go to 30%, 35, maybe 40%. Depending on where you bought this. If you were one of those people that overbid, you're going to lose a lot. So this is just a problem that we're looking at. Let me go to my next slide and let's just take a look at that. So here we go. As rates rise, you're going to have to pay less to get your cash flow. That's just what's happening. You have to pay less and less to get the cash flow. So what does that mean? Look at what's happening in commercial. Let me go to my next slide. You can take a look at what's going on in commercial. Here's Ken McElroy. He's telling you he just bought this property for $92 million. It's $50,000 to $60,000 per unit below replacement cost. That's what we're going to be looking at. You are going to find these all over. It's starting. We're going to see this cascade, and all those people who are trying to hold on are going to throw in the towel, and they're going to be gone. So commercial was like about a year ahead of us. So we're probably, right on time for my time frame. Remember, if you look at my last video, please, if you look at my videos, please like them and subscribe. So the last video we did last week, we were talking about our timing model. The timing model says we're going to have a first buy point is coming next year, and that's going to be in same time frame. So commercial went in about a year ahead of us. We're going to be right behind commercial, and we're going to be getting this done. So let me go back to my next slide. I don't want to make this a long one, but I do want to talk to you about these things. The most difficult thing for an investor to master is patience. You have to be patient if you want to make some money. You have to wait for your turn for it to come. Those that jumped in during the bubble, they had to get in. They are going to take a loss. Now, I want to assure you this is what's happening now. We have got a shift from financial assets like stocks and bonds, annuities, to real things. We're going to start talking about real commodities. We're going to talk about forest products, agricultural products, natural resources, precious metals, and of course, housing is made out of all of these things. What a great thing. And you get a cash flow. So not only is housing made out of commodities, but you get a sustainable cash flow that comes along. You get paid to hold these things, and that's what's happening. So we are looking at probably a huge drop in the dollar. You can see this now. This is talking about when we came off the gold. We've lost almost 100% of our purchasing power since then, and we're probably going to do more because, as you know, in our other videos, we were talking about the fact that the dollar is going to take a drubbing. But that's not what we're here to talk about right now. We're here to talk about a couple other things. So let me go to my next slide and let's just see what we've got here. So generational fortunes will be made. I cannot emphasize this enough that if you hang on and if you're patient, we are going to make a fortune. Now, this is where I can be reached. We are getting ready for this. We want to know who you are, what you're looking for, how much capital that you want to put in. We're talking about what your risk tolerance is. I want you to get to know me. We need to do a consultation. It takes about 2 hours to really get to know each other, make sure we're a good fit with each other. And we're going to start to get ready because we want to talk about how much leverage we want to put in, if we want to put any leverage in. My portfolio is basically cash, just basically cash. Now, I did start out with cash, but almost all my loans are paid off. So the cash flow I have is just enormous. I'm not concerned really about the drop because, the values are, I'm more concerned about the cash I receive than what the capital gains is. But we've got a big, huge capital gain experience coming to us if we purchase right. And so we want to know you. So give us a call if you're interested in this, and we will get together with you. We'll schedule an appointment, and we'll spend some time. You tell us what you're looking for, what you want to do, what your experience is, and what your goals are, and where we can fit in to do this. Make sure that you and I are a good fit. We have a huge team here. We've been doing this for years. We do an exceptional job. So my very best to you guys. Give me a thumbs up. Watch my other videos. See you guys. Bye-bye now.